the blueprint for daily trading profits. Mindset, strategy, and discipline. Hello and welcome. The idea of making money from trading every single day sounds like a dream, doesn't it? For many, it feels like a distant fantasy. But what if I told you that this dream can be your reality? It's not about luck or a secret code. It's a matter of having the right mindset, a precise strategy, and an unwavering will to win. The market presents a new challenge every day, but the trader who understands its rhythm and masters their own internal game can consistently come out on top. What I'm sharing with you today isn't just theoretical advice. These are powerful insights drawn from a transformative book, Winning Trade Every Day: How to Make Money from Daily Trading. This book contains the essential rules, mental frameworks, and trading secrets that, if applied, can set anyone on a path to consistent profitability. It's time to leave behind doubt and fear. Now is the time for focused, deliberate action. Let's embark on the journey to discover the path that leads to profitability day after day. In this guide, we will break down the 3 core pillars that form the true treasure of this philosophy. 1. The trader's mindset. How does a consistently profitable trader think? What truly separates an amateur from a professional? 2. The winning trading strategy. The power of taking just one high-probability trade per day. We will learn how to identify that trade and the rules that govern it. 3. The real game of risk and discipline. Most people focus on making money but fail at keeping it. Controlling your losses is the ultimate victory in trading, and we will delve deep into how to achieve this. If your goal is to execute one winning trade each day without unnecessary risk and mental confusion, then this is for you. Let's begin with the first and most critical pillar. Pillar 1. The unshakable trader's mindset. In trading, your most powerful weapon isn't a fancy indicator, it's your mind. Understanding every move of the market is important, but understanding how you think and make decisions is paramount. Let us explore the thought processes of a daily winner and the fundamental differences between an amateur and a pro. 1. Your greatest challenge is your own brain. Trading is not magic. It is not a game of chance. It is a business, a professional undertaking. However, most people approach it as a form of gambling or let their emotions drive their decisions. When the market rallies or crashes, fear and greed cloud their judgment, pulling them away from reality. These two emotions corrupt your decision-making process. Fear forces you to exit a trade prematurely, missing out on potential profits. Greed pushes you to take oversized risks, leading to catastrophic losses. This emotional roller coaster is the primary reason most traders end up losing their capital. 2. How to master fear and greed. A winning trader isn't someone who never feels fear. They are the one who acknowledges both fear and greed and has a system to manage them. When you operate from a place of fear, you close trades too early. When you are driven by greed, you hold on for too long, turning winners into losers. The first step is to learn to listen to the market's message, not the noise of your emotions. You must follow your predefined rules, not your fleeting feelings. The market doesn't care about your mood, but your decisions are profoundly influenced by it. Operating with emotional detachment is a skill that must be cultivated. 3. Learn to accept losses. The first step to victory. Winning every single day in the market is an unrealistic expectation. Losses are a normal, inevitable part of trading. The true mark of a professional is not the absence of losses, but the ability to accept them and extract valuable lessons from each one. Traders who fear losses or ignore them are eventually forced out of the market. A winner analyzes every loss, refines their system, and comes back stronger. Remember this powerful principle: a loss is the tuition fee you pay to become a successful trader. Every setback is a necessary lesson on your path to mastery. 4. View trading as a business. The greatest illusion you can harbor is that trading is a gamble. You must treat it with the same seriousness as a professional business. When you run a business, you carefully assess risks and rewards. You leave emotions at the door and make calculated decisions. Your trading should be no different. Every entry, every exit, and every risk management decision must be made with a cool, rational, and business-like mindset. 5. Focus on right decisions, not just money. Most people are fixated on the money. In their desperate rush to get rich quickly, they make critical errors. The daily winner, however, focuses on executing the right decision and adhering to their rules. The money will follow naturally as a byproduct of correct and consistent action. Shift your internal goal from "I need to make money" to "I need to execute this trade correctly according to my plan." 6. Commit to continuous learning. The market is dynamic and ever-changing. A strategy that works today might be obsolete tomorrow. Therefore, you must be a perpetual student of the market. Learn from your mistakes, study new patterns, and constantly strive to improve. Trading is a journey of constant evolution, not a final destination. Those who commit to lifelong learning and self-improvement are the ones who ultimately succeed. Remember, the trader who wins every day is the one who conquers their own mind before they conquer the market. Adopting this mindset is your foundation for long-term success. Pillar 2. The single high-probability trade strategy. Now let's discuss the engine of your daily success, your strategy. This is not a magic wand, but a smart, simple, and consistent plan designed to help you identify and execute just one high-confidence trade each day. 1. The power of a single trade. For most traders, especially those starting out, taking multiple trades often amplifies mistakes. The market is not 100% predictable. Therefore, it is far wiser to focus your energy and capital on finding one high-probability setup. This focused approach allows you to maintain complete concentration. Your risk is contained and your potential for profit is maximized because you are not diluted across multiple lower-quality positions. Your mind remains calm because you are not constantly chasing every flicker on the chart. This is why many professional traders often take only 1 or 2 well-researched trades per day. Their focus is deep, not broad. 2. How to find a high-probability trade. The first step is to understand the market's context, to follow the trend. If the trend is up, look for buying opportunities. If it's down, look for selling opportunities. Learning to read chart patterns and candlestick formations is crucial, as they provide clear signals for your entry and exit points. Use technical indicators to support your analysis, but never rely on them 100%. They are tools for confirmation, not crystal balls. 3. Create and obey your trading rules. You must have a strict set of rules for every trade you take. Your rules should clearly define entry criteria. What specific conditions must be met for you to enter a trade? Stop loss level. Where will you place your stop loss to cap your potential loss? This is non-negotiable. Profit target. What is your predefined exit point to secure profits? Cardinal rule. Never trade against the dominant trend. Adherence to these rules is what will build the consistency you need to profit over time. For the 3 essential tools for every trader. Every successful trader leverages 3 core tools. Chart analysis. Understand how the market is moving by analyzing price action and volume. Trend analysis. Clearly identify the market's direction. Are we in an uptrend, downtrend, or a ranging market? Risk management. Never risk more than you can afford to lose on a single trade. This is the bedrock of survival. Mastering these 3 tools will allow you to confidently identify those high-probability trading opportunities. 5. The role of patience and emotional control. Even the most brilliant strategy will fail if you lack patience and emotional control. Patience is required to wait for your perfect setup. The market will present countless opportunities, but your job is to wait for the one that fits your plan perfectly. Entering a trade out of impatience, fear, or FOMO, fear of missing out, will almost certainly lead to a loss. 6. Practice and meticulous record keeping. Keep a detailed journal for every trade. Record the date, the reason for entry, the outcome, and most importantly, your emotional state. This journal will become your most valuable teacher, revealing the strengths and weaknesses of your strategy and your own psychology. Is one thing. Learning from your own lived experience is what leads to true mastery. Pillar 3. The unbreakable rules of risk and discipline. Now we arrive at the 2 pillars that will determine your longevity in the markets: risk management and discipline. Management. Protecting your capital. In trading, making money is important, but preserving your capital is essential. A fundamental rule is to never risk more than 1 to 2% of your total trading capital on any one trade. Always trade with a predefined profit target and stop loss to maintain a healthy risk-reward balance. 2. The crucial risk-to-reward ratio. Simply limiting losses isn't enough. You need to make profits. This is where the risk-to-reward ratio becomes critical. A proficient trader typically aims for a scenario where the potential reward is at least 2 to 3 times the amount risked. For example, if you are risking $100 on a trade, your profit target should be at least $200 to $300. 3. Discipline. The unwavering adherence to your rules. Discipline is the bridge between your strategy and consistent results. Without it, you will never find lasting success in the market. Discipline means if you set a stop loss, you honor it without exception or negotiation. You never open a trade without a plan. When you experience a loss, you do not panic. You trust your process and continue. You constantly work to improve your strategy, but you never make impulsive changes based on a single trade. For mastering your emotions, the true key to victory: fear, greed, and impatience. These 3 emotions have the power to destroy a trading career. Your discipline only works if you prevent these emotions from taking control. Your mind is your greatest asset. When you feel emotions rising, take a step back, pause, breathe, revisit your trading rules, and execute them mechanically. The goal is to become a disciplined executor of a plan, not a gambler driven by hope and fear. 5. Consistently evaluate your progress. Your trading plan will only be successful if you continuously monitor your progress. Maintain a detailed record of every trade, win or lose. Analyze how accurately you followed your rules. Periodically review your overall plan and make thoughtful, data-driven adjustments. With these 2 elements, you will be a formidable player in the trading game for years to come. Your journey to consistent profits starts now. This framework provides you with a solid foundation. The dream of daily profitability is within your reach, but it demands a commitment to the process. If you found this guide valuable, we invite you to join our community. Subscribe to stay updated with more powerful and practical trading insights. Share this knowledge with fellow traders, and let's build a community focused on disciplined success. Now we'd love to hear from you. In the comments below, tell us, What is your single biggest trading challenge right now? Let's work together to make the path to market success clearer and more achievable for everyone. Thank you for reading.